Mark, my question, and I think markets are partly answering this question, is does this actually matter? Is there any sign this is actually possible?
Yes, good morning. Well, the Hong Kong dollar doesn't seem terribly interested so far. It's still pretty close to the strongest point of its band, 775, against the US dollar this morning. And overnight, the Hong Kong Monetary Authority had to sell Hong Kong dollars, as it has been doing several times since June, to prevent the Hong Kong dollar from getting too strong. So at least for now, the market impact is not very much. And also, as you were mentioning, Hong Kong stocks have already risen again this morning. They're having a good week. So in terms of what the initial impact is, it's really very, very little. It's hard to see that it's had any discernible impact at all on Hong Kong markets.
Mark, if, and it seems like a big if at this point, if the US did go ahead to undermine the Hong Kong dollar, what are some of the potential consequences?
Oh, they've got a lot of hurdles to cross if they really wanted to make any damage to the Hong Kong dollar. For a start, the Hong Kong Monetary Authority is very experienced in defending the Hong Kong dollar. Not only does this mechanism in place have certain characteristics which mean they're automatic stabilizers, but the Hong Kong Monetary Authority has been through several crises before, starting with the Asian financial crisis, and it's seen off speculators against the Hong Kong dollar many times. Just one of the many things they could do is to allow short-term interest rates to rise very steeply. So the cost of shorting the Hong Kong dollar just became exorbitant. In 1997, short-term rates reached 300%, so that dissuaded speculators pretty quickly. So the HKMA is the first obstacle. If they didn't have enough money themselves, they could draw on swap lines with the PBOC in China, who's got $3 trillion of reserves. So again, the amount of money available to defend the Hong Kong dollar is enormous. That would put off a lot of people. And if they still wanted to pursue it, China is probably not going to let this go easily. They would consider this to be a very serious economic act against Greater China. And they might suggest they'd be willing to retaliate with a few measures of their own, possibly against US securities markets directly. They own a lot of treasuries and they own US stocks. China certainly could inflict some damage on the United States if they had to, in that respect. So there really are, and these are just some of the issues which would be faced. It would really be almost a suicide mission if the United States decided to attack the Hong Kong dollar.
Yeah, it's going to get messy, to say the least, because, yeah, as you alluded to, Mark, we can get into all sorts of other aspects to this as well. As we were just talking here, Mark, so what we have is you have 1 year forwards, and put this into context for us, up 12 points around 202.31. So we talked about how at least the spot market was yawning this one off. What do I watch in the forwards market to, that might indicate that traders are starting to pay attention or even just play this?
Yeah, certainly. I mean, this is definitely a place to look at. I mean, we have 1 year forward points around 200, just above 200 right now. We saw them spike to about 800 earlier this year when there was some concern about the Hong Kong dollar, about financial markets in general. So you could see they could rise quite a way, even without the spot Hong Kong dollar doing very much at all. The forward market can move quite a bit. It's suggesting that the cost of funding Hong Kong dollars gets more expensive. But if you want to see some kind of a comparison, so we mentioned 200 is today. When the Hong Kong dollar really came under attack in 1998, those same points reached 8,000. So that gives you some kind of a comparison as to how severe it could be if the Hong Kong Monetary Authority wanted to penalize speculators.